wonderful people, welcome back to my channel. Hey, it's the first episode of a new series called Wilson versus NASDAQ. And basically, every week I will try to understand what happened in the US stock market. And the economic students is trying to prove they read, right? And this is not the financial advice, this is just a joke. Yeah, a joke. So what happened this week? The short version is the AI is not dead, but I'm kind of dead, The AI trade is just getting a little more complicated. 就是哪能讲呢？好不容易我整个热起来的市场以后，市场被只屁股倒脱了。This is what just happened this week. And for the past 2 months, the market was trading AI like a simple story. Nvidia, good. Data center, also good. Everything with the AI in a sentence goes up. But this week, the market started asking a harder question. Who actually makes the money from AI? And more importantly, whose profit margin destroyed so someone else can make money? This is the real story of this week. And on Monday, after the long weekend, the market opened with pretty good vibes. Geopolitical risk was cooling down, oil price was falling, and the US-Iran situation looked less crazy. And the risk appetite should have been decent. But then, about 30 minutes after the open, the market suddenly dropped. There's a picture here. Yes. But there's no major headlines and no obvious disasters, just NASDAQ casually choosing the violence. At first, the people blamed the Japanese yen, and the yen was extremely weak. The market started worrying about Japan might intervene, right? And this could trigger an unwind of yen carry trade. I can discuss about carry trade further in another video if anyone interested. So please comment down and subscribe. But basically, a lot of the global money borrows cheap yen and buy the higher return assets. If the yen suddenly strengthened, those trades can get forced to unwind. And when the leverage trades got unwind, nobody has fun. But I think the yen was the only surface level reason. The deeper reason was the liquidity, right? And we are approaching to the end of the June, which means the quarter end rebalancing. And also小朋友要放暑假了的，所以呢，我这个月你就要暑假了，要10块了，老了。And large pensions, the sovereign wealth funds, and institutional portfolios often rebalance at the end of the quarter. When the stocks have done well, they mechanically sell stocks and buy bonds to return the target positions, right? It sounds boring, but the borrowing flows can move billions of dollars. When the market is already crowded in AI, even the mechanical selling can become painful. So the first thing of this week was the liquidity got tighter. Not because the economy collapsed, not because AI suddenly stopped working, not because I'm buying the stock, maybe related, but yeah. But because large institutions were selling, hedge funds were reducing risk, and the quarter end flows were putting pressure on stocks. Then, on Tuesday, things got uglier, and uglier too. The pain started in Korea, and the KOSPI dropped sharply, and Samsung and SK Hynix sold off hard. There were a lot of rumors, the tax on the unrealized gains, the slower HBM expansion, the weaker Rubin GPU demand, and ADR delays, MSCI issues. Some of them might be real, but some of them feel like the classic market panic. But the bigger point is simple. The Korean AI chip stocks had gone up too much, too fast. The SK Hynix had even briefly passed Samsung in the market cap, which is a very strong signal that the market was getting extremely crowded. When a trade becomes too crowded, it does not need a harsh reason to fall, right? It just needs a reason. Even Wilson can become a reason, right? And no, just kidding. Don't blame me for that, all right? And once the Koreans sold off, the US AI hardware sold off too. Semiconductor got hit hard, memory stocks got hit hard, optical communication names got hit hard. NASDAQ dropped more than 2%, and the VIX moved back to 20. And suddenly, everyone remembered that, fuck, the stocks can also go down. But then came the Wednesday night. the Micron reported the earnings, and the number were not just good, they were 老绿，对吧？they 真的太老绿了。They beat the expectation on revenue, on margin, and also the guidance. And more importantly, management basically said the HBM is still extremely strong, supply is still tight, and they do not see any supply catching up with demand anytime soon. And the HBM storage could last into 2027. That is an important message because before the earnings, the market was worried about maybe AI memory demand was slowing. Micron basically said 拿来了50，对吧？阿拉老绿了，现在，对吧？ And this is why I think the long-term AI hardware story is not broken. But here is where the story gets interesting. If the Micron is making so much money from memory, someone else has to pay for it, right? And on Thursday, the Apple basically said the quiet part loud. Apple announced the price increases in several Mac and iPad products because memory costs were rising due to the AI data center demand. And the matter of fact, my iPhone 13 is dying, so yeah, the Apple is basically shorting on me, right? Did you see that? Good. Did you see that? The market immediately starts thinking, wait, if Apple is already complaining about the memory costs, what about the Microsoft, Google, Amazon, Meta, Oracle? These companies are spending hundreds of billions of dollars in the AI infrastructure, right? And if the memory, GPUs, powers, optical components, and data center equipment all keep getting more expensive, then the AI CapEx becomes a margin problem. That's the real conflict. The upstream AI hardware companies want to raise prices, the downstream cloud and the consumer tech companies want to protect margins. The investor wants the AI growth, but they also want the profits. Everybody wants the AI, nobody wants the bill, right? So someone please give me some money to buy the iPhone. And just kidding. But Tim Cook, if you are watching this video, I'm telling about you. So not just kidding. So this week, the AI trade was changed. It is no longer just by the AI. It is now figure out who captures the profit pool. Right now, the AI seems to believe the strongest profit is in the upstream infrastructure layer, memory, semiconductor, optical communication, advanced packaging, power, and the data center hardware. And that is why the Micron and SanDisk had huge moves. And that is why the SK Hynix became such an important stock. And that is why Corning rallied on glass substrate and optical interconnect stories. But at the same time, the big cloud names and the mega cap names are under pressure because they are the ones writing the checks. This is what I called the AI's prisoner's dilemma. Microsoft, Google, Meta, Amazon, and Oracle cannot stop spending on AI. If they stop, the market will say they are falling behind. But if they keep spending, the margins get pressured. So they are trapped. I'm also trapped. They have to spend, even if the bill is painful. I have to buy a new iPhone, even if it's fucking expensive. This is also why Meta 7 has looked weak. The market is not saying these companies are bad. The market is saying maybe they are no longer the cleanest way to play AI. Maybe the better trade, at least for now, is in the suppliers, people selling the shovels. But even that trade is getting crowded. By Friday, the market was basically stress testing the entire AI supply chain. The Apple complained about the memory prices, Korean sold off again, OpenAI reportedly considered delaying its IPO, and SoftBank dropped because it owns a large stake in the OpenAI. Semiconductor sold off, but interestingly, the US index did not collapse. The S&P 500 and NASDAQ opened weak, but they recovered during the day. Part of that was the options structure. Dealers were in the long gamma, which means the market had mechanical support on dips and resistance on rallies. In the simple language, the market was being forced into a range. Dip too much, dealers will buy it. Rip too much, dealers sell. But instead of a crash, we got a messy, annoying, high volatility sideways market. Toxic relationship, right? Charming. By the end of this week, my main takeaway is this. AI is still the dominant market theme, but the easy phase is over. In the early phase, you could buy almost anything related to AI and probably feel smart, like I do, right? And now, the market is becoming more selective. Memory can be strong while the software is weak. Semiconductor can rally while the Mag 7 struggles. Cloud company can spend aggressively while their margin get questioned. AI infrastructure can still grow, but not every AI stock deserves a premium. So the game is changing from buying AI to choose the right part of AI. That is why I think the AI stocks are entering the Hunger Games. Same thing, more computation, more volatility. Going into next week, I'm watching these things. First, the quarter end rebalancing. June is almost over, and a lot of mechanical selling pressure should fade after the end of the month. And if the liquidity improves in early July, the market could get a seasonal rebound. Second, whether the S&P 500 can reclaim its short-term moving averages and fill the downside gap. If the index can quickly recover, this pullback may just be a normal mid-cycle reset. If it cannot, then the market may need more time. I am going to need more time. Third, the AI CapEx guidance. This is the most important one. As long as the Microsoft, Google, Meta, Amazon, and Oracle do not cut the AI spending, the AI infrastructure is probably not dead. But if one of them says we are slowing the AI CapEx, then the market will take it very seriously. For now, my view is this is not the end of the AI bull market, but it is the end of the lazy AI trade. It is the end of me. So from here, you cannot just buy every stock with AI in the presentation deck. You have to know who has the pricing power, who has the margin pressure, and who benefits from the CapEx, and who is just paying the bill. So that's it for today's Wilsons versus NASDAQ. And if you enjoyed the market recap, like and subscribe, and comment down what stock or sector or financial terminology you want me, an economic student, to cover next week. Again, financial advice? No. Financial survival? Yes. So yeah, I'll see you guys in the next video. Have a good one, guys. Eat, drink, blah blah. Bye.